Hey guys, Eric Green. No, your client's offer is not going to get accepted. I already know it. Why? Well, stick around and I'm going to break this down for you, okay? The hardest thing about offers isn't an offer. It's not the formula. Join us on one of our tax rep classes. I'll teach you how to do an offer in 2 hours that'll get accepted. It's not the formula. It's not the process. That's all easy. You know why your offer is not going to get accepted? Because of your client. That's why. I know it. You know it. They don't know it yet, but they're going to know it soon. Here's why. The biggest obstacle to getting an offer, the number one heartache of offers, the number one thing that undoes them or blows them out of the water or whatever, is the client's failure to maintain compliance. So, what is tax compliance? Tax compliance, for purposes of the IRS, and I'm going to say that very specifically because the states are different. The states are all over the place. All right, we do a whole video on that. For IRS tax compliance, is defined as having returns filed for the last 6 years. So I'm recording this now, the end of April 2025. That means that they should have 19 through 24 on file. Now, if 24 is on extension, 18 through 23 will get you there. All right. But honestly, if my client called me and said, "Yeah, well, I'm on extension for 24," I have a better idea. Basically, screw you. Let's get the 24 done. Couple reasons. One, if there's going to be a balance on it, I want to roll it into the offer. And two, let's just deal with this. The idea that you're going to go on extension to deal with it later. I mean, we could put the offer off till later. But the point is, for compliance, last 6 years, 19 through 24 will get you there. The other thing is they need to be in current compliance this year with their tax payments. What that means is if they're a W-2 employee, they're having enough withholding done so they aren't going to run up a balance. They're self-employed, they've made their estimated taxes. April 15th was due. They should already have that estimated tax payment in. If they're late, they can make it late. That's fine. But you got to have it on file. All right? Now, self-employed, if they're an employee, and if they're a business. If they're a business, they should have made their payroll tax deposits for this year. They check all those boxes or the boxes that apply to them. They're in compliance. They have to be in compliance when you file the return. They have to maintain compliance throughout the offer, and then they need to maintain compliance for 5 years following the acceptance of the offer. It is compliance that will undo the offer. Okay, I had a client, and I love these clients. I really did. All right, they're just wonderful people. Still are. We submit an offer, get them into compliance. We're waiting for the offer to be worked. It finally gets worked in January of the following year. And the settlement officer, the appeals officer, because they denied the offer, we went up for appeals. I now am with the appeals officer, called the settlement officer on the collection side. And she said, "Eric, look, I've reviewed everything. I agree with you. I'm going to accept the offer, but I just want you to know something. They didn't make their third and fourth quarter estimated tax payment, so this is going to be void when they file their return in April." Oh my God! So I call the client, right? It's a beautiful day out here in New England. I'm just out, as you can see, enjoying a cigar, my cigar break. Anyway, I call the client and I said, "You didn't make your estimated payments for third and fourth quarter?" They said, "Don't worry, but we'll make it up by April." It's too late. You're not in compliance. You're going to get an estimated tax penalty on your return, and your offer is void. That was a great waste of time and money and effort. So I'm very frustrated by this. I'm very good friends with their accountant. So I called them the next day. I don't know why I thought of this. I called and said, "Look, the owner is the husband. The wife works there. Is she on payroll?" And he said, and I should have known this, but he said, "Yeah, but for like a minuscule amount." I said, "Here's what we're going to do. We're going to issue a bonus to her on the final payroll I think it's due by January 15th. We're going to issue her a bonus payroll. We're going to zero out the profit on the S corp, And withholding is always timely when it's received by the government, reported and received. And he said, we can do that. So we called the client, said, you got to get the money together. They got the money together. When they filed the fourth quarter 941, they issued the wife, who did legitimately work there, a bonus. She had all the taxes withheld, so that when they filed their return in April, we had basically zeroed out the income. They were full paid, and the offer wasn't voided. Tax compliance is going to be the killer, because you're dealing with clients that are very good at whatever they do, right? They're great landscapers, or they're great cabinet makers, or chefs. But there are clients for a reason, usually, and it's because they can't get their financial shit together. So compliance is going to be the biggest thing. And if you happen to be a taxpayer who's watching this, you need to just make a commitment to put this behind you. And it's not just coming to an Eric Green or one of our tax rep members or your CPA if they're trained to do this, and just say, can you fix this for me? It's got to be, in a way, a lifestyle change. It's like working out in a way. Because if you're not going to make the change, the whole thing is going to be void in a year. You're better, don't even waste your time. You're wasting our time, your money. All right. And I got better things to do with my time. The tax compliance is going to be the killer. Now, I think I'm out. Anyway, so in terms of why your offer is going to fail, tax compliance is the biggest one. But now let's talk about some other things. Transcripts. The CSED. What's CSED? Collection statute expiration date. The IRS has 10 years from the date of assessment to collect the tax. Okay? Now, there are things that taxpayers will do that will extend or toll the statute from running. Still out. Anyway, what will toll it? Anything that prevents collection, so filing of a bankruptcy, will toll the statute. An offer in compromise, requesting an installment agreement, the pendency of the agreement will toll the statute. Once the agreement's in place, the statute continues running. But until then, statute's tolled. So how long remains on the statute is critical. It is why we pull transcripts. It's why I'm such a big fan of tax help software, which not only gets us all the transcripts, but has a CSET, a collection statute expiration calculator, built right into it. In fact, it's the best. That is critical, because one of the main issues around the filing of an offer is the client cannot show that they can full pay. If the client shows an ability to full pay within the time on the collection statute, they are not eligible for an offer, right? They're going to have no choice but to get into a full pay installment agreement. Well, how do you know if they can full pay? You've got to get the transcripts. You've got to do the CSED calculation, right? Critical. So, first thing that's going to kill an offer is compliance or failure to maintain compliance. Number two is not doing the work on the transcripts and not realizing that they're able to full pay. Now, there we go. There are some strategies when we have a client that potentially we could adjust their ability to pay. There may be some expenses that they've put off that are allowable, that kind of stuff. But we need to be able to make sure or confirm they're not going to be able to full pay within the time on the statute. The last thing, the big one, all right, the one that we will train you, or we're going to train you on all this stuff, but we really train you up and down, left and right, is calculating reasonable collection potential, or RCP, right? Reasonable collection potential is the formula that the government uses to determine if a client can full pay, and if not, what they can pay. All right, this is the formula, the cornerstone that drives everything. All right, now we're not going to cover this in this video. We have literally about 12 hours of training, item by item, going through how to calculate RCP. You join Tax Rep, you will be a guru in RCP. We're going to make sure you are. We're not going to let you loose on taxpayers if you're not. Now, understanding the RCP rules and applying them and doing the calculation is critical. So when taxpayers call us and we want a $5,000 retainer, it's not just because we just feel like getting 5,000. There is a lot of work to do. We got to pull transcripts, confirm you're in compliance. If there are missing returns, what are they? Are there substitute for returns? Do we need to, or want to get those fixed? Maybe, maybe not. Are you in compliance in terms of your estimated payments you're withholding? Right? How much time remains on the C set? If you owe for multiple years, we got to run it on each year. And we have to do the RCP calculation. One, can you do an offer? Two, if so, what does that look like? And three, do we have any strategies that we can employ to help give your offer a better chance of being accepted? All right. So the big three things: compliance, CSET calculation, and RCP. The final thing, the big one, actually it's not, but one thing I want to remind you, we get most of our offers accepted, but we take many of them to appeals. Don't think an offer specialist at the IRS knows anything about offers. Many of them don't. It is not uncommon where we have to take the client's case to appeals to get in front of an appeals officer and get something done. So, don't be afraid to appeal. Now, if you've never been involved with an appeal, congratulations. We do them all the time. I actually like appeals. In fact, I prefer to be with appeals, honestly. But if you've never done an appeal, it's a phone call. It's not like an appeals court, right? We're not getting in a suit. We're not going into downtown Manhattan to the Second Circuit Court of Appeals. No. It's a phone call with an appeals officer at the IRS. They tend to be a little better trained. They have a lot more experience. You have highlighted what the issues are. They should have reviewed it in advance, and then you're going to have a discussion about it. Most of the time, we can come to terms, all right? An appeals officer's goal is to try to see if there's a way to resolve it without litigation. So don't be afraid to take the case to appeals. This comes up usually during audits, where you're dealing with an auditor and they're being a little unreasonable and you don't agree, and they're like, oh, I see, this is going to appeals. And there are some practitioners who will just cave. Oh, yeah, so taxpayers are going to lose. I'm like, well, why didn't you go to appeals? They're like, I don't know. Go to appeals. In fact, the moment an audit said to me, oh, this is going to appeals, good. Fuck you. Audit's, excuse my language, but audit's over. All right? Thank you very much. It's been very unpleasant dealing with you. I hope I never see you again. Get me that letter and let me get my appeal filed. Thrilled to go to appeals. I'd much rather go to appeals, honestly. So if you've never been to appeals, if you're a practitioner, don't be afraid to go to appeals. Trust me on this one. All right? If you're a taxpayer, make sure your practitioner is comfortable. They've been to appeals before. All right? And just tell them, look, I understand we may have to get to appeals to get this resolved. So I'm willing to negotiate a deal, right? There is penny wise, pound foolish aspects to this, but we're not going to roll over here. If we have to go to appeals, then we'll go to appeals. So I hope you find this helpful. So you know why your client's offer is going to fail. Hopefully, though, you've done your work up front. You've eliminated this, or at least you know why, and you told the client, look, this isn't going to work. Here's why. That's why we take our retainer. That's why we have to do that work up front. All right? But trust me, you can master this. I guarantee you can master this. Remember, compliance. Without compliance, offer, installment, it's going nowhere. So compliance. Calculate the CSET, how much time remains on the collection statute. Get the transcripts, do the work, use tax help software. It's a no-brainer. Okay? Number three, master the RCP calculation so you know what the IRS is going to do. And this way you can inform the client, this is what an offer looked like, here's why it's going to work, and this is the number. And finally, the big one, don't be afraid to go to appeals. Audit, collection, doesn't matter. Offer, it's there for a reason. We do a lot of work at appeals. And it's not because we did anything wrong. It's because we're dealing with someone at the IRS that's either stubborn or doesn't know what they're doing. All right? Don't be afraid to go to appeals. I'll see you inside Tax Wrap. Guys, if you're enjoying this content, share it with other friends of yours, other colleagues. Please hit like and subscribe. It does help us. And if nothing else, we'll be able to stay in touch. You'll know when we post new stuff. All right? Please comment below. Let me know what you think. Is this helpful? You have other questions? I'm going to keep answering questions as long as you keep pointing them out and telling me you have them. All right? Have a good afternoon.